Greetings and welcome to the Viva Gold Corporation webinar. It is now my pleasure to introduce your host, Mr. James Hesketh. Mr. Hesketh, you may begin.
Yes, thank you very much. Good morning, ladies and gentlemen. I'm introducing you today to Viva Gold Company. We are a gold exploration and development company with a advanced stage project in TONOPAH, Nevada. We trade on the Toronto Venture Exchange under the symbol VAU and on the OTCQB in the U.S. under VAUCF. We also have a Frankfurt listing of 7PB. Let me just advance the slide. So Viva Gold, the investment highlights. The strong management team, deep experience in mine exploration and development. We've got a tight capital structure of 39.2 million shares outstanding. We currently have a valuation that's at about $30.5 per resource ounce in the ground of gold. That's compared to a current gold price of over $2,000. So we believe that there's inherent value in this company that can be unlocked by advancing this project towards production. We own 100% of the TONOPAH Gold Project. It is located on the Walker Lane Trend in western Nevada. This is in close proximity to a number of operating mines. So this is mining country. It's a place that you can permit and build. This year we've announced a 37% increase in our in-pit constrained resource. That means that it's been designed with a pit for extraction, and 2/3 of that is in a high-grade, high-level measured and indicated category, the resource. The resource remains open along trend in pretty well all directions at this point, so we anticipate being able to increase the size of the project with additional drilling. We've got high-grade gold resource that would be in the starter pit, and actually the first 2 years of operation essentially pay back the capital investment on a preliminary economic basis, so that's quite good. The PEA, or preliminary economic assessment, that we have completed was completed at a $1,400 gold price with an upside sensitivity of $1,700. Gold price in the last few weeks has shot, and we're currently over $2,500 per ounce. So by all measures, our estimations were fairly conservative. It's a low capital open pit heap leach investment opportunity that would produce 40 to 50,000 ounces of gold a year. To put it in the context of current market, that would be a revenue stream of $80 to $100 million a year. So this is truly building a business. And infrastructure here, as we'll discuss, it's excellent. So moving along, the reason to look at Viva is the gold market. This slide's a couple weeks out of date, and it's already, we're sitting at about $2,040 this morning. And gold is being driven at this point by essentially printing by the central banks, pandemic, civil strife, basically an economic hinge point that we're undergoing right now, and that is driving gold as a store of value vis-a-vis devaluing currencies. So that's the backdrop towards this slide, and we can anticipate that the spending out of Washington and the other capitals around the planet is going to continue to stimulate, and that'll continue to be a positive influence on gold. So Moving on, our capital structure. Shares outstanding, 39.2 million shares. Fully diluted, about 58 million shares. The bulk of our shares, options, and warrants today are in the money. So we anticipate that being our financing stream in the near future. Market cap this morning is sitting at about close to 16 million Canadian. So the management team, it's a strong team of professionals. Chris Harold, our chairman, bachelor's and master's in geology, former chairman of the Denver Gold Group, and long background in company operations, over 40 years. Myself, I'm a mining engineer and mineral economist by training, both large company experience and smaller companies. Ted Mahoney over on the right-hand side, very strong geologist. He was the former chief geo at the Kinross Round Mountain mine, which is about 30 miles from our site. And, you know, he's provided very strong geologic input to the drilling on our project. Dave Whittle, our newest director, is former CEO and CFO, a very strong background in the, so far has provided some excellent advice and input. Gary McDonald and Steve Krause, again, both true mining professionals. So we've got a very strong team on board with this company. Moving on to the project now. Tonopah project, it's located just north of Tonopah, Nevada. Tonopah, Nevada is located about halfway between Reno and Las Vegas. And there's, as I stated earlier, a very strong trend of mines in this district. Former explorers on our property includes Core Mining, Rio Agam, Kennecott Exploration, which is now part of Rio Tinto. Newmont did the bulk of the exploration. They're now the world's largest gold company, and Midway Gold. We acquired the project in 2017, and it has at this point in time about 8,800 acres of land, and a portion of which is subject to a royalty that we're able to negotiate down, and it's currently sitting at 2% with a 1% buyout option. But when we acquired the property, we also acquired an extensive database of geophysical, geologic, hydrology, and environmental studies, and we're currently in the process of updating a number of those studies to move the project towards feasibility study. So most of you are not technical geologists, so we won't do much here, but the two rock types, tertiary volcanics, Ordovician argillite, we've got some high angle faults, and the mineralization came along the faults, hit the contacts, and spread out. And then we also have mineralization in fault fillings, and that's throughout the property. As we go to the next slide, the scale here, these little squares are about half a mile each. And we've got the main zone, which is depicted by these light orange green blobs. And the light green is reflective of 0.15 gram per ton or higher gold grades. And this is where the pits reside, and it's all associated with the structures. We see substantial upside potential along the northwest fault, the west fault, and at the junctions of the Right Patch Fault and the Discovery Fault zones. So we anticipate a lot of exploration upside as the project moves along through time. But as we sit, we've got a developable or potentially developable resource that we can move forward on right now. This is a long section. This is, as you see, the Tonopah measured and indicated resource. That's well drilled. We have the Midway Hills resource, which is poorly drilled. That's not in our resource base at this time, but there's 20 to 30,000 ounces contained in the Midway Hills that we needs additional drilling to bring in. So a preview of some of our exploration results over time. We get a combination of high and low grades. High grades are associated with the faults. The lower grades are associated with the structural contact between the argillite and the volcanics. And as you see in the picture, we do get some zones where you can actually see some free gold. So it's a very exciting deposit from that view. And we see a lot of upside, but it also presents a high-grade core of mineralization that's quite near surface, and I'll cover that in a minute. But as we look at the project, our current resource estimate within a pit shell is just over 500,000 ounces of measured, indicated, and inferred. And we currently have a drilling operation on the perimeter of the inferred zone to upgrade that to measured and indicated and to further expand the inferred resource. As you take a look at our measured, indicated, and inferred, if we increase the cutoff grade, that's the measure of the grade to above 1 gram, 42% of our ounces are above the 1 gram cutoff, which is quite high for an open pit heap leach project. So this is the block model, the 1600 resource pit. You can see the pit shell in the background. And that's really how we're looking at this. And the greater than 2 gram material shows up in the red. As we go to a long section on that same picture, we actually have another color here, the purple, and that's greater than 3 grams. But you can see that the big chunk of the mineralization is within 30 feet, 10 meters of the surface. And that's where the starter pits would go in. You mine the shallow stuff first. And you go straight into high-grade material. And as you can see from this long section, we've got over 600 drill holes in this deposit, so it's not lightly drilled. Almost 90,000 meters of drilling. That's 90 kilometers of drilling, which divide by 1.6, it's close to 50 miles of drill holes. And that puts it in context, but it's a well-drilled core to this deposit. As you move to the left and the right on the flanks, the drilling essentially disappears. And that's where we're testing with our current drill holes right now. So as we look at the economics of this project, the base case, and this is using a 3-year trailing average gold price, it was $1,400, and it produced a positive net cash flow of about $43 million, 25% IRR. At $1,700 gold, that increased to 47%. Now, if I take a look at that same model, let me just get that. That same model at $2,000 gold, where we're currently sitting today, the after-tax economics, NPV 5%, increases to $120 million. The $1,600 case, which is the resource case, that one goes to $144 million. So we see substantial upside as gold price increases. And the difference between the resource case and the $1,400 design case was an increase of about 50% in the contained ounces. As we move ahead, the planning prices will increase, and you'll see increases in the overall gold resource. All-in sustaining costs for gold production in this case was about $1,000. Cash cost about $754. So there's ample margin built into this to justify moving ahead with feasibility study and potential construction based on feasibility study results. But that's the upside to the company. You have economics here. Let me go back to this slide. Economics here at $1,700, where you've got a cash flow of $136 million versus a market capital on the company of about $15 million today. This is in U.S. dollars, by the way, versus our market cap in Canadian dollars, which is about 75 cents exchange rate. So let's move on. Infrastructure. As you can see from this slide, there are no neighbors here. The nearest neighbor that lives full-time is about 20 miles away. This is mainly a dried lake bed where you've got blowing sand on the floor, and it's a great place to mill to mine. There's no other economic value to this land. The road in the background is the main highway that runs up to the Round Mountain mine. The Belmont Road, which comes into the picture, there's a sign on that road as you hit the turnoff. It says next gas 145 miles. Bottom line is we won't have any difficulty moving that road. There's just very little traffic. We also have well fields located within 3 miles of the site. That's the town of TONOPAH public utility wells. They're up drainage from us. And we have the Nevada grid is powering those wells. So that, there's water, power, paved road access. So this is an excellent location for a development. We can actually we've got pictures of FedEx delivery directly to the site. So as we move on, we're currently in the process of drilling 3,000 to 4,000 meters of core and RC. That program started in July. We'll be doing additional metallurgical test work. We're updating the hydrologic, cultural, and environmental studies for permitting, and we're initiating feasibility study probably early next year as we move forward and have the data to do so. So at the end of the day, this slide is now a bit dated because of gold price, but why invest in Viva? Well, our peers, the current average on a resource base for measured and indicated, it's about $102 versus our $30. We see a lot of traction here for price improvement. And that'll come, we believe, as we advance the project. So that's the end of the prepared slides. We've got a little bit of time, so I can take some questions. And I see we do have some questions mounted up here. Let me read this. Yeah, the first question is, when can we expect to get the results of the ongoing drill program? Will we get results as they come, or will they be released at the end of the campaign? We typically release results as we get them, and we send the samples out for assay on a periodic basis. Every couple of weeks, as we build 2 or 3 holes, we'll send it out, and then that creates a grouping. So we'll release results, and the first set of results, because of laboratory backlogs, we expect towards the end of this month. Let's see, the second question here. This is it's asking about the share price and Viva Gold's reaction to it. Viva Gold's share price has actually risen about 50% this year. So we've had very strong gains, and we anticipate as we put out more technical information into the market that those gains will continue apace. We did start from a low level, so we're building on that at this point. The next one is what is the planned schedule and milestones for the company to get to production? Drilling, permitting, feasibility, construction, production, et cetera. We're currently doing a infill/step-out drilling program. We anticipate upgrading quite a portion of our resource as we move forward out of this program. We're also capturing sample for metallurgical test work and environmental test work. We anticipate having a number of the background studies completed this year. That would include upgrading our archaeology studies, hydrology studies. That's the study of the groundwater. We're currently, that's underway. We're currently working on, I have RFPs here, requests for proposals and quotes for geotechnical. That's to understand the rock quality, and that drives directly to pit slope angles, which will also, that directly drives strip ratios. So it's an important metric. We'll probably award that study here shortly. We've got metallurgical RFPs going out as well. So that work will take most of the remainder of this year to complete. That drives then into feasibility study. The feasibility study usually takes, on a small project like this, would take about 6 months to complete. And that also produces the mine plan of operation, which initiates the final permitting process. That would be the permitting process under NEPA and various acts, Clean Water Act, et cetera, that we have to abide by here in the U.S. And right now, an EIS process, that's an environmental impact statement, has a statutory 1-year timeline for completion. So that would put us towards the end of next year in terms of moving towards a recorded decision out of the Bureau of Land Management and the ability to start construction. So that's really kind of the timelines that we're looking at. It's by all measures a fairly compressed timeline, but in this location with this particular project, I believe that can be done. You know, there's no deleterious impacts here. Do we have any other questions? That's all the questions on the list here. Mm-hmm. So if no other questions, yeah?
I was going to say, if you had no other questions coming through, did you have any closing comments?
Yeah, I'd make a comment here. I believe that Viva presents strong value and value generation. We've got a advanced stage well-drilled project that can be rapidly developed, in our opinion. And it's in a location where you can actually permit a mine. A lot of locations, the mines, you may build a resource, but you really can't permit them. We've got excellent infrastructure, and we've got a tight capital structure by all measures. So I believe that Viva, as an investment, provides strong value, and we'll see some growth come out of this. Anyway, a gold cycle is a wonderful thing, but you have to be able to catch it, and I believe we're well positioned to do that. That's about all I have to say right now. Thank you all for attending, and you all have a good day.
Ladies and gentlemen, thank you for your participation. You may log off the webcast at this time and have a wonderful day.